Hello and welcome. Welcome back, everyone. It's great to have you here again. After what seems like an eternity, 6 long months of tedious sideways consolidation in the cryptocurrency market, we might finally be approaching a significant turning point. This prolonged period of little to no movement in the market has been challenging for many, but all signs indicate that we could be in for a dramatic shift as early as next month. However, the downside is that this change might come with some short-term pain, particularly for those invested in altcoins. Today, I want to walk you through what we might expect in the coming weeks and months. Specifically, I'll be discussing 3 crucial charts that, in my opinion, paint a pretty clear picture of what's likely to happen. The first thing we'll look at is why September could be a rough month, particularly for altcoins, and why this might not be the start of the next big bull run just yet. Then, we'll delve into the implications of the upcoming Fed rate cuts. Yes, they're finally happening. And why these cuts might not necessarily signal a return to good times. Lastly, I'll share some good news. Despite the potential near-term challenges, we could be nearing the bottom for altcoins, setting the stage for the much-anticipated altcoin season. So stick around, as this is critical information for anyone involved in the crypto space. The Fed rate cut, a double-edged sword. The first significant event we need to discuss is the Fed's upcoming decision to cut interest rates. The September meeting of the Federal Reserve is highly anticipated, with many in the market speculating on the extent of the rate cut. Current predictions suggest that there is a 65% chance of a modest quarter-point reduction and a 35% chance that the Fed might go for a more aggressive half-point cut. For those unfamiliar, a rate cut typically signals an attempt by the Federal Reserve to stimulate economic activity by making borrowing cheaper, which, in theory, should be good for investments, including cryptocurrencies. However, before we get too excited, it's important to take a step back and look at the bigger picture. Historically, the first rate cut after a period of monetary tightening is not always a harbinger of good times. In fact, it can often be quite the opposite. Let's take a look at interest rates over the past few decades, particularly focusing on periods following major crashes. Back in the early 2000s, after the dot-com bubble burst, the Fed raised interest rates to curb inflation and then eventually cut them. But what followed wasn't an immediate economic boom. Instead, the market experienced a severe downturn, culminating in the notorious 2001 recession. The Fed's pivot, which many hoped would be a turning point, actually preceded one of the worst economic downturns in recent history. Similarly, in 2008, after interest rates were hiked above 5% and kept there for an extended period, the Fed eventually started cutting rates. This time, the result was the Great Financial Crisis, another severe recession that hit global markets hard. So why is this relevant today? Well, if we examine the current situation, we find eerie similarities. The Fed has been holding rates high for a prolonged period, and we are now at the cusp of a pivot. History suggests that the first rate cut might not bring the relief many are hoping for, but could instead signal that the economy is under significant strain. This potential for economic contraction could mean further downside for risky assets, including cryptocurrencies, particularly altcoins, which tend to be more volatile. Why this time might be different or not? Of course, no 2 economic cycles are exactly the same, and there's always a chance that this time could be different. However, it's crucial to approach this period with caution. While some market participants are eager for rate cuts, viewing them as a catalyst for a renewed bull market, the reality could be more complex. The Fed's decision to cut rates might be an acknowledgement that the economy is weaker than previously thought, which could have broader implications for all asset classes. In the context of cryptocurrencies, particularly altcoins, this means that while the market might initially react positively to a rate cut, the underlying economic conditions could lead to further declines. Investors should be prepared for a potential market shakeout before we see any real recovery. The key takeaway here is that the first Fed rate cut, while significant, might not be the positive event that many are hoping for. It could very well mark the beginning of a challenging period for the economy and the markets, including crypto. Seasonality and market trends. Why September could be painful. Understanding seasonality in the crypto market. Next, let's talk about seasonality and how it plays a role in market movements, particularly in the cryptocurrency space. If you've been in the crypto market for a while, you might have noticed that certain months tend to be better or worse than others. This phenomenon is not unique to crypto. Many financial markets experience seasonality, where certain times of the year see more positive or negative price action due to a variety of factors, including investor behavior, macroeconomic events, and even psychological patterns. To give you a clearer picture, let's take a look at historical data for Bitcoin and the broader crypto market over the past decade. Historically, most months in the year are positive for cryptocurrencies, with Bitcoin showing gains in a majority of them. However, there are a few outliers where the market tends to struggle, and September is one of them. On average, September has been a tough month for Bitcoin, often leading to negative returns. The data shows that on average, Bitcoin has declined by about 5 to 6% in September, making it one of the worst performing months of the year. Why September might be particularly bad for altcoins. Now, if you're heavily invested in altcoins, this information should be particularly concerning. When Bitcoin struggles, altcoins tend to fare even worse. This is because altcoins are generally more volatile and more susceptible to larger price swings. In a month where Bitcoin might be down 5 to 6%, it's not uncommon to see altcoins drop by double digits. This September could be especially challenging because it coincides with the anticipated Fed rate cut, as discussed earlier. The combination of seasonal weakness and potential economic uncertainty makes for a volatile mix. One of the reasons why September tends to be a weak month could be related to broader market cycles and investor behavior. After a relatively quiet summer, markets often experience a shakeout in September as investors reassess their positions ahead of the final quarter of the year. In the context of crypto, this means that traders might be more inclined to take profits or reduce their exposure, particularly if they anticipate further economic challenges on the horizon. Looking forward, why Q4 might be different. However, it's not all doom and gloom. While September might be rough, the good news is that the final quarter of the year, October through December, has historically been much more favorable for cryptocurrencies. October in particular has often been a strong month, with Bitcoin showing solid gains. This positive seasonality extends into November and December, which are typically among the best months for the crypto market. So while it's important to brace for potential turbulence in September, it's equally important to remember that better times could be just around the corner. The key will be surviving any short-term volatility and positioning yourself for the potential upswing in Q4. This could be especially true for altcoins, which after a final flush out might be poised for a significant rebound as we head into the end of the year. Ethereum versus Bitcoin. When will altcoin season arrive? The Ethereum-Bitcoin ratio, a key indicator. Finally, let's dive into one of the most important charts for altcoin investors, the Ethereum-Bitcoin ratio. This ratio is a powerful tool for gauging the relative strength of Ethereum and, by extension, the broader altcoin market against Bitcoin. When this ratio is rising, it means that Ethereum, and likely other altcoins, are outperforming Bitcoin. Conversely, when the ratio is falling, Bitcoin is the stronger performer, and altcoins are generally struggling. Over the past few years, we've seen the Ethereum-Bitcoin ratio in a downtrend, which aligns with what many in the crypto community refer to as Bitcoin season. During this time, Bitcoin has been the dominant force in the market, with altcoins lagging behind. This trend has been particularly pronounced since the last major market peak in late 2021. However, like all things in the market, this cycle is likely to change, and the big question is, when? Identifying market cycles. When does Bitcoin season end? To answer this question, we can look at historical data to identify patterns in past market cycles. Typically, after a major bull run, altcoins tend to peak shortly after Bitcoin does. For example, in the 2017 bull run, Bitcoin peaked in December, followed by a blow-off top in altcoins a few weeks later. After the peak, the market entered a prolonged bear phase, during which altcoins suffered significantly. If we apply this framework to the current cycle, we can see that Bitcoin and Ethereum both peaked in late 2021. Since then, we've been in a bear market, with the Ethereum-Bitcoin ratio steadily declining. However, based on previous cycles, we might be nearing the end of this trend. Historically, the transition from Bitcoin season to altcoin season happens roughly 2 years after the peak, with some variation depending on the specific cycle. Looking at the current timeline, we're approaching the 2-year mark since the last peak. This suggests that we might be close to the bottom for the Ethereum-Bitcoin ratio, and by extension, the broader altcoin market. One of the key indicators to watch for is a sustained reversal in this ratio, which would signal that Ethereum and other altcoins are starting to outperform Bitcoin once again. Why this time could be different: the 3-month flushout. Another interesting pattern to note is the 3-month flushout that has marked the bottom of the Ethereum-Bitcoin ratio in previous cycles. In both 2017 and 2020, the ratio saw a sharp decline over 3 consecutive months before bottoming out and reversing. Interestingly, we've seen a similar pattern play out recently, with the ratio declining over the past 3 months. If history is any guide, this 3-month flushout could be a strong signal that we are at or near the bottom for this cycle. If this is the case, then we could be on the verge of a new altcoin season, where Ethereum and other altcoins start to outperform Bitcoin in a significant way. However, it's important to remember that this is still speculative, and the market could always throw us a curveball. Preparing for altcoin season: what to watch for. If you're invested in altcoins or considering entering the market, now is the time to start paying close attention to the Ethereum-Bitcoin ratio and other key indicators. A sustained move higher in the ratio, especially if it coincides with improving sentiment and positive market developments, could be the confirmation we need that altcoin season is upon us. However, it's also important to approach this with caution. While the potential rewards are high, the risks are equally significant. Altcoin season, when it arrives, can be incredibly lucrative, but it can also be volatile and unpredictable. As always, make sure you're managing your risk and not overexposing yourself to any single asset. Conclusion. To wrap things up, let's quickly summarize the key takeaways from today's discussion. First, while the upcoming Fed rate cut in September is a major event, it might not be the positive catalyst that many are hoping for. Historical patterns suggest that the first rate cut often signals economic trouble, which could lead to further downside for risk assets, including cryptocurrencies. Second, September has historically been a tough month for the crypto market, particularly for altcoins. However, the final quarter of the year has typically been much more favorable, so it's important to stay patient and avoid making hasty decisions based on short-term market movements. Finally, the Ethereum-Bitcoin ratio suggests that we might be nearing the end of Bitcoin season and the start of a new altcoin season. While there are no guarantees, the patterns we've discussed today indicate that altcoins could start to outperform Bitcoin in the coming months, potentially leading to significant opportunities for those who are prepared. As we navigate this potentially volatile period, it's crucial to stay mentally prepared for whatever the market might throw at us. While there are reasons to be cautious, there are also reasons to be optimistic. The key is to stay informed, manage your risk, and be ready to take advantage of opportunities as they arise. Before we sign off, I want to remind you that we've introduced a new Super Thanks commenting system on our channel. If you found today's content valuable, or if you have any questions or comments, please use the Super Thanks feature below. Your support means a lot, and it helps us continue to bring you the latest insights and analysis. Thank you so much for watching. If you enjoyed this video, please give it a thumbs up, and don't forget to subscribe to the channel for more content like this. I'll see you in the next video, where we'll continue to explore the latest developments in the crypto market. Until then, stay safe and stay optimistic. Goodbye for now.